Hey guys, it is Subayal here. Facebook, now called Meta Platforms, announced its Q4 results on the 2nd of February 2022. After the markets closed, and it was an absolute catastrophe. The shares of Meta Platforms plunged almost 23% in the extended trading session on Wednesday when it posted disappointing 2021's fourth quarter earnings. We will be using the names Facebook and Meta Platforms interchangeably during this video. So I would like to share my opinion on what is going on. I would like to go over the main factors that I believe underpin the chaotic drop in Facebook stock price. Facebook gets a lot of press, as we can see that in just the last 7 days, there have been over 500 articles published about Facebook on leading news forums according to TipRanks. The number of bearish articles covering Facebook has exploded and account for 81% of the total articles published as compared to the sector average of just 36%. So I have studied tons of these articles to uncover the holistic picture so that you don't have to read them. Now, Meta Platforms also provided Q1 2022 revenue guidance below expectations. Management has cautioned about several factors in the upcoming period. These include ad targeting and measurement headwinds from Apple's iOS changes that are expected to have an impact of $10 billion on business in 2022. Regulatory changes, increased competition, and macroeconomic challenges including cost inflation and supply chain disruptions and foreign currency impact. As an investor who invests in companies with durable competitive advantage, whose stocks are trading well below their intrinsic value, I would like to stay away from Facebook since its PE ratio is quite high and it is overvalued at the moment. I would have paid a higher price for Facebook stock if the growth prospects of Facebook were looking good. But it seems that it isn't the case, as we will see shortly. And the current events paint a gloomy picture for Facebook. I have shortlisted 5 major problems for Facebook after doing my research. And these problems are interrelated, meaning one problem could potentially elevate or enhance another problem on the list. So let's go through each one of these problems one by one. The first problem is that user engagement numbers for Meta Platforms fell short of the market expectations in Q4. The company recorded 1.93 billion daily active users, while the analysts' consensus predictions had been for 1.95 billion daily active users. And even though the average revenue per user of $11.57 in the period did beat the market's forecast of $11.38 per user, but the number of daily active users declined for the first time in company's history. The disappointing results shocked the market. Management chalked the relatively soft performance up to macroeconomic headwinds and user privacy changes on Apple's mobile operating system. And the second problem is reliance on Metaverse. Meta Platforms is making huge investments to take a leading position in the Metaverse domain. And it looks like this push will create a significant drag on earnings in the near term. But the problem is that we don't know at this point whether this gamble will pay off or not. Many innovative blockchain metaverse projects might take the lead since big companies are mostly less strategically agile. Putting too many eggs in the metaverse basket can be catastrophic if a blue ocean from a small company obliterates the Meta Platforms initiatives in the same way as iPhone destroyed the Nokia's mobile phone business. Zuckerberg already told investors that his company would spend around $10 billion on Reality Labs, its division devoted to virtual and augmented reality and dedicated to creating products and services for the metaverse. However, a gaping fourth quarter loss in Reality Labs and only moderate growth showed that it will likely take several years for the metaverse bet to pay off. So Meta reported a $3.3 billion operating loss from the Reality Labs in the quarter. But what was more disappointing was that revenue in the segment only grew 22% to $877 million, essentially matching the growth rate of its advertising business. The growth also disappointed after reports showed that Oculus was the top downloaded app in the US around Christmas, indicating that the Oculus Quest 2 virtual reality headset was a popular gift over the holiday season. If the revenue growth of Reality Labs doesn't accelerate, Meta will be burning billions in in cash annually for several years for a project that still seems highly uncertain. And the third problem is sales growth below market's recent expectations. To make matters worse, sales growth in the near term also looks primed to come in below the market's recent expectations. Management is guiding for sales in the 27 billion US dollars to 29 billion US dollars range for the first quarter, while the average estimate of analysts polled by Refinitiv has called for revenue of 30.15 billion US dollars. Meta management is calling for a roughly 7% year-over-year sales growth in Q1, which would be a dramatic deceleration from the 48% year-over-year sales growth the company posted in 2021's first quarter. And the fourth problem is unprecedented competition. As I mentioned before, Facebook has reported a fall in daily active users for the first time in its history. And the reason for that is obvious. It is the growing competition from rival social media apps such as TikTok, as acknowledged by Mark Zuckerberg himself. He admitted that the rise of rival apps such as TikTok is having an impact on Facebook. This is slowing the revenue growth since the competition is growing, and this has resulted in the decrease of spending among advertisers. He stated, "People have a lot of choices for how they want to spend their time, and apps like TikTok are growing very quickly." He also stated, "TikTok's strength as a competitor and its speed of growth bring a new dynamic for Meta." TikTok has become increasingly popular among young users who prefer the video sharing platform over Facebook and Instagram as the way to interact with followers. In response, Meta has introduced its own video sharing service, Instagram Reels, in an effort to lure back the young generation of social media users who started looking elsewhere. And the fifth problem is fewer ads and lower price per ad. Now, Facebook management is concerned about two important facts: fewer ads shown to people browsing its apps and lower prices per ad, both of which are detrimental to its revenues. The company said in the press release accompanying the earnings results that on the impression side, we expect continued headwinds from both increased competition for people's time and a shift of engagement within our apps towards video services like Reels, which monetize at lower rates than feeds and stories. Moreover, the price of ads is also facing headwinds stemming from Apple's changes to privacy settings on its devices, which makes it harder for Meta to track user activity and decreasing demand from businesses that are supply constrained during the pandemic. Thankfully for shareholders, the latter is likely to be temporary. However, the Apple privacy changes are probably long lasting and the most prominent cause of sell-off. And here are my thoughts. I will not be investing in Facebook or Meta stock since I don't like the company. My business ethics and moral constraints won't allow me to. There are a lot of companies in the world which could make me money as an investor if I do proper due diligence. I won't be investing in a company that puts profits before safety. Let me know in the comments below. What do you think about the Meta stock and future growth potential of Meta platforms? If you found this video useful, please don't forget to smash the like button for the YouTube algorithm. Thank you so much for watching the video till the end. I really appreciate that. You are all awesome, and as always, I will see you guys in the next video.